So TDS and TCS. Let's begin the concept of advanced tax, TDS and TCS. TCS provisions are dealt under, there is only one section, that is 206C, which has 5 subsections. We can actually call them as clauses. They are actually clauses. They are actually called as what? Clauses. There are 5 clauses under which TCS provisions are discussed. 1C, 1D, 1G, 1H. We'll discuss that later. We'll come back to it later. TDS. So what is TDS? Tax deducted at source. Very simple. The person who is paying some money to you. For the person who is paying, its expenditure. For the person receiving, it's an income. Generally, in the basic concept level, at the first chapter level, what we generally think, income will be earned in the previous year, on the tax will be paid in the assessment year. Income tax assessment computation and all we generally do in assessment year, and we pay tax in the assessment year is what generally we understand in the first chapter when you're learning. But income tax department don't want to wait. They want to simultaneously collect the tax along with your income. When you are earning income itself, they want to collect the tax simultaneously. For that, what they are doing, where and all you are getting some income from various people, they are keeping a condition on the payer itself. Don't pay full amount. In that amount, my tax portion also there. So what you have to do, the payer, what he has to do, when you are paying, deduct some tax. Deduct some amount towards tax. Balance you pay to the SSC. He is my SSC. Balance you pay to him. That whatever tax you deducted, right, you withheld, right, that's called withholding of tax. What is it actually called as? Withholding of tax or deduction of tax. You remit to me. How do you remit to me? You remit me on a monthly basis. Now, the tax which you are deducting, while paying the amount which you are paying, it may be salary, it may be commission, it may be rental expenditure, or it may be sale consideration on purchase of immovable property, or whatever it is. For what purpose you are paying, I don't know. You withdraw tax and then give me the money. So when you are remitting money to me, when the deductor, the person who is paying, is called as payer, since he is deducting the tax while making payment, we call him as deductor. The deductor has to remit to the department tax on a monthly basis. He has to remit the tax to the department on a monthly. The tax he deducted, right? It's whose tax? Payee tax liability or payer tax liability? Payee's tax liability. In Tamil, payee means dayam. No? Yeah. So it's actually, payee means devil. Yes, I said Telugu one. Ghost. Payer. Yeah, fine. That's okay. So the payer deduct the tax and balance amount he will have to the payer. Now the tax whatever he deducted, he might have deducted this tax related to salary, related to commission, related to rent, related to professional fee, related to purchase of immovable property, related to anything. You pay me section wise challan. Don't pay me all put together this much you deducted. No. You pay me section wise challan. For 192 section, for salaries, how much tax you collected? Sorry, how much you deducted? For salary, who will deduct TDS? Who will pay salary? Employers will pay to employee. So you deduct salary to TDS. You pay me 192 section. You prepare a challan where you have to select 192 section and pay me. 194A, you are paying interest. A bank is paying interest to so many of their depositors. Bank has deducted so much of interest. Bank will pay me under 194A, TDS deducted by them on interest. Suppose there is a bank called State Bank of India. It is paying salaries to their employees. It is paying rent to their offices. It is paying interest to their depositors. It is giving so much of cash withdrawal to their depositors. So many. State Bank of India is deducting tax from their employees. State Bank of India is deducting tax from their customers, deposit holders. State Bank of India is deducting tax while paying rent. State Bank of India is deducting tax while paying cash withdrawals. So many. Dear State Bank of India, you pay me whatever you deduct, month wise, each section wise, total amount deducted, pay me in a challan. Now you paid me. Okay. You paid me almost 100 crore rupee, saying for April month, April, first month of the financial year, 10 crore worth of amount. Let's assume 10 crore. 10 crore worth of amount you paid me under 192. May month also you deducted 10 crore from all this 1 lakh employees of State Bank of India. Again, June month also for all these 1 lakh employees, 10 crore rupee deducted. Total for these 3 months together, how many challans for salary State Bank of India paid to the department? 3 challans. How many? 3 challans. April month salary related TDS challan, May month, then June month. Now, department know. Do they know this 10 total 30 crore belong to which employees? How do I know? So, dear State Bank, you file me a return. You file with me a return. We call that as statement, TDS statement or electronic TDS statement, ETDS return. What you will show in that? Sir, April month 10 crore under 192 section challan I paid. No, this 10 crore is belong to these 1 lakh employees. Look, these are the PAN numbers. For each PAN number, this much amount. This 10 crore, challan number 1. It belongs to 1 lakh employees. This 10 crore is this 10 crore is deducted from how many? Not one employee. 1 lakh employees. 1 lakh employees PAN number, I will mention in the TDS return. Each PAN number, how much I deducted, I will have a record when I paid salary. So that much I will show this breakup to the department. Now what department will do? Tomorrow this employee, he will file income tax return. At the time he will show income, right? Tell me, will the employee show income gross or net? Yes or no? Income. Suppose if somebody asks me, what is my income? I should tell my full salary, not after TDS. I will tell full salary. When I'm calculating tax also, I will have to calculate on the total income. Then in this tax amount, already my employer, my boss, deducted some amount from me while he's paying me salary and remitted on my name to State Bank of India. Sorry, income tax department. He gave me proof of the remittance also. Can I set off this and pay only balance tax to the department? Yes. I can set off the TDS amount and pay only balance tax to the department. Now when I am setting off, department should allow me, right? When department will allow me? Only if my employer pays it. What is the procedure for employee? Every month he has to pay. Yes or no? Nothing but here employer means deductor. Employer means payer. Correct? So TDS mechanism works like this. TDS mechanism works like this. Even TCS also the same. TCS also the same. For TDS, the return is different. For TCS, return is different. We have three types of returns. One, TDS return for salaried employees, TDS return for other than salaried people, and TCS separate return. 3 returns they will file. Now, what is the periodicity of filing these returns? Quarterly basis. What is the periodicity of filing? Quarterly basis. Okay, but you will be deducting TDS every month, right? Not in fact every month, whenever I am making payment. Whenever I am making payment, whenever the payer is making payment, he will deduct the TDS as and when he makes. But whenever you deduct, immediately don't remit, no problem. Give me on a monthly basis. Department, you will remit TDS on monthly basis, section wise. Quarterly basis, you should show me breakup of each challan. Each section wise, you paid me this much amount. This amount collected from whom? Deducted from, you should tell the department also, no. For that you have to file which return? ETDS return. So monthly remittance to the department, quarterly filing of TDS statement with the department. Let's first look at that. So entire TDS overview is given. So here TDS whatever you deducted, whether you are deducting under these sections or whether you are deducting under these sections. Actually 193, 194A, 194C, 194D up to Q, these sections, no, whatever is covered here, I will come back at last and then once again revise this. Stable. Here, no, we generally deduct a TDS at the time of credit in books of accounts. Date of credit means what? Credit in books of accounts means I recognize the expenditure in books of accounts. Or payment, whichever is earlier. You paid first, then later recorded, then payment time you deduct. You did not pay yet. You are recording in book. At the time itself, show TDS adjustment. At the time, record liability to only net amount to the employee or to the tenant, sorry, to the landlord. So you only show net amount liability to them. Gross amount of expenditure your book, net amount liability show, balance amount you show toward department liability. That is called as deemed deduction. Getting the point? He will pay later. When he is paying, I'm not bothered. The moment he write journal entry in books of accounts, at that time itself, TDS, I assume you have deducted. Suppose you paid much before that, then that time itself you have to deduct, whichever is earlier. For some sections like salary, premature withdrawal of provident fund, interest, sorry, 194 is dividend. 194 is dividend. And 194B, 194BB are winnings. Winnings. Both are dealing with winnings. 194DA, maturity of life insurance policy. 194LA, compulsory acquisition of agriculture. 194N, 194P, pension income for a specified senior citizen. And 194R, perquisite, which is received by business people or professionals. In all these amounts, if at all you are paying to them, you should only deduct at the time of actual payment. When you record in books of accounts also, I am not bothered. Only when you are paying, deduct and then remit. If you are paying on 5th May, salary, deduct on 5th May. Since 5th May comes in May month, you should pay the TDS amount by due date which falls in the June month. What is the due date? So here no deduction. Here deduction will be either date of credit or date of payment, whichever is earlier. Yes or no? Now, here date of payment, whatever it is, you are a deductor, not a government deductor. Suppose if it is deducted by government, the rule is different. You are a other deductor, means non-government deductor. That is what we see in day-to-day time, day-to-day life, right? Yes or no? For government deductors, no, CS and all will not work. For government, they have separate departments, audit departments and all. They have C&AG and all, accounts department. There is a department called Indian Accounts and Audit. Okay, that will take care of government officers related things. But for other deductors, what is the due date? Generally, the due date is what? Any month. Whenever you are, if the deduction is in a particular month, that is April to February, 7th of next month is the due date. 7th of next month. By the way, what do you mean by date of deduction? For some sections, it is date of credit or date of payment, whichever is earlier. For some sections, date of payment is only the date of deduction. Date of deduction is equal to date of payment. Whereas for some sections, date of deduction is equal to credit date in books of accounts or payment date, whichever is earlier. That is date of deduction. Date of deduction, you see, April 4th. By May 7th, you should remit. Suppose date of deduction, September 9th. By October 7th, you should remit to the department. While you are remitting, will you remit all the deducted amounts total and then in single challan? No. I will put separate challan. Separate section wise, I will put a separate amount challan. Again, for each section, I have so many deductees. I have so many payees. Yes or no? That breakup, when I will show to the department, quarterly basis, I will show. Getting the point? Now, so 7th. For February month, I deducted. February 24th, I deducted. March 7th. March 2nd, I deducted. April 30. Only for the March month, if the TDS is deducted in the month of March. By the way, who is deducting here? Non-government deductor. Other deductors, we call them as. If TDS is deducted in the month of March, for that alone, we have given time limit up to 30 April. Why? Books of accounts are closed on March 31st. So many outstanding entries, all that they need to collect. They need to determine what are all expenses they need to record. So it will take some time. Books closing process is time taking. That's why due date is also additionally given. Are you clear? Now you are remitting challan. April month, June month, July month put together Q1. Remaining Q2, Q3, Q4. For each quarter, for each section wise you remitted challan, right? For each challan, how many people are affected? You should give the details, right? For that, you need to file what return? ETDS return, electronic TDS return. It's called TDS statement has to be filed. By what time you have to file? If it is Q1, exactly 1 month time. Exactly 1 month. Quarter ending date to 1 month. Quarter 1 ends at 30th June. That June month related TDS amount you will pay by July 7th. But information of April, May, June put together department you have to give by. For Q2 31st October. For Q3 ends on 31st December. So naturally 1 month extra 31st Jan. But for Q4, how can 30 April? Our payment itself 30th April. So I must give 1 month extra from the payment rate. 31st May. For Q4 alone, the due date for filing TDS return is 2 months. For remaining 3 quarters, from the end of the quarter, 1 month is the due date. Correct? Okay, fine. Suppose, yes sir, I deducted and I remitted on a monthly basis. Quarterly, I even filed information with the department from whom and all I deducted, all that I gave. Now, the persons from whom I deducted, no, I should give them the proof, right? That I remitted to department. Look, I didn't eat your money. I paid to the department. I need to give them the proof, right? When I will give this proof on a quarterly basis, I will give. Form 16 I will give for salary deductions. Pension is also salary, remember. Pension is also salary income. For salaried payments, Form 16 I will give. For other than salary related payments where I deducted tax, Form 16A I will give. Salary related by 15th June of the financial year. If I give by 15th June of the financial year, that's enough. Whereas for remaining, you know, once ETDS return due date comes, from there 15 days. From there 15 days. I should be, because employees, they will only be with me, they will listen. Others, why will they listen? Will you think they will wait up to next year for showing them the proof of payment? No, they want immediately. Look, you deducted from me in April, May month. ETDS return you filed by, you should file by 31st July. I assuming you filed on 31st July. Where is the proof that you filed with the department? I am giving you 15 days time. Give me the proof. So for other deductors, we will give them Form 16A. Even if you don't give in reality 16A also, once I file ETDS return, in their 26AS form, it will be reflected. What is Form 26AS? You will understand once you go into articleship. Clear? That's it. Now, there are some sections. Now, you know, like as an employer, as a businessman, I am making payments to employees, you know, my deposit holders. As a bank, I'm paying to my deposit holders. I'm paying rent to the landlord. So many people I'm paying, I'm deducting tax. When I'm deducting tax, I will not deduct it using my PAN number. I will use my TAN number. There is a number called TAN number, Tax Deduction and Collection Account Number 203 section 203A. There is a section called 203A, which says in order to deduct tax and remit to the department, you can't remit in your PAN number. It is belonging to various thousands of people PAN. So you should remit with some other name. Your identity will be reflected with some other name. TAN number. You're getting a TAN number. But there are 3 sections where TAN number is not required. Like deductor, payer, he is deducting tax. But for 3 sections related TDS amount, I will directly pay to the department by mentioning in the challan my PAN number, deduct the PAN number directly. Normally, salaries, no. When I'm paying challan, no. Only my TAN number and PAN number will be mentioned. From whom this amount is deducted, their PAN numbers, how will I mention 1 lakh PAN numbers? Salaried employee, yes or no? I cannot mention that. So I will pay first, once in 3 months, I will compile the entire data and file your return. But there are some transactions, purchasing immovable property. Suppose I purchased from you immovable property, more than 50 lakhs, stamp duty value or consideration. 1% I deducted TDS from you at 194 IA. I should immediately inform to the department that I collected from you. Like, did I purchase from 1 lakh employees, 1 lakh people, immovable properties? No. These are all once in a while only transaction happen. So here, no. I have to deduct TDS, right? The TDS have to remit to the department by mentioning my PAN number, by mentioning deductee PAN number, means seller PAN number. And I will file a challan. For that, we use the form, we actually, we name the form as what? For that, we name the form 16B. 194 IA. What is the form? 16B. 194 IB is just 1 alphabet extra, 16C. 194M, just 1 alphabet extra, 16D. Getting, these are the forms which we will give. What is the time limit for TDS deducted under these 3 sections? Generally, if any TDS is deducted for a particular month under any section, by next month 7th I should pay. But for them, 30 days from the end of the month of deduction for these 3. Because no, you need not file TDS return also. For these 3, no TDS return. First of all, you don't have TAN number. In these 3 cases, generally SSCs will not have what? TAN numbers. So you just have to pay the amount to the department by 30th of the next month. In the month in which you deducted, that month you ignore. That next month by within 30 days. 30 days from the end of the month of deduction. And you need to furnish a challan. You need to furnish challan. For that some format is given. This challan number is not required. This due date is important. This due date is important. And this due date. This is what challan remittance due date. And you know, for some sections like salary, interest on deposits, 194D, insurance dividend, 194D dividend, 194 it's commission other than insurance commission. For these 4 sections, department can give, in special cases AO may give quarterly payment option for these 4 sections only. Are you getting it? For these 4 sections, quarterly payment. Generally, any section, what is the payment? Monthly. By what time? Next month 7th. March month, by next month 30th. Correct? But for 3 sections alone, 194 IA, 194 IB, 194 M. I will discuss in the respective section what exactly they are dealing with. You should pay within 30 days from the end of the month of the deduction. Correct? This is how the main scheme of the TDS. So deduction, what is the consequence of deduction on the deductee? What we need to do after deduction? What are the duties of the deductor after deducting TDS? You need to remit and you need to file the TDS statement. That's it. Now let's directly begin with the first one, TDS section 192. TDS on salaries. TDS on salaries. So at what rate TDS on salary will be applicable? What is the rate at which TDS on salary will be applicable? They say average rate. We don't even in reality compute average rate. What we do, I know very well how much salary throughout there I am paying to my employee. I already know what are the components of salary I am paying to my employee. I know very well what deductions he will get, what deductions he will not get. I know. Only one thing I need to ask. In case of normal tax regime, if my employee chooses normal tax regime, I need to just ask him proof of chapter 6A deductions, proof of interest on housing loan deductions. I will just take those proofs and consider and calculate his total income, calculate tax, whatever rate applicable to individual, calculate tax, and I will, that amount of tax, I will collect it on a monthly basis, average. I just average to 12 months. We'll just, what we do, we just average it to 12 months. In reality, I don't know how much, I will not wait up to 31st March. I know my employee how much package is getting. Because I'm the company, I know his employment contract. Based on the package details, I will compute what are all the deductions, what are all the tax components, all that, salary components, all that. I will ask him, are you going for default tax regime or are you going for optional tax regime? If at all he replied, I will choose that option. Suppose employee did not reply properly, I will apply default tax regime. Default means what? By default, that only. By default, the tax regime only applicable. If employee specifically says, no, sir, I don't want default tax regime, optional normal tax regime, then I will ask him, give me proof of deductions. Or in the month beginning, first April month, March, up to March, he has time to invest in chapter 6, all that. So I don't know whether he will invest or not. I will take a declaration that employee said, sir, don't worry, sir, by March month, I will give you 80C 1.5 lakh. By March month, I will give you 80D 50,000 1 lakh rupee limit. You don't worry. These are all deductions. Please consider. This is my total gross total income. You know very well. You are the one who is paying me salary. So consider and calculate. This is my tax liability. Don't deduct in 1 month, sir. Deduct in 12 months equally. That is why it's called averaging concept. That is why it's called average rate of tax concept. Are you clear? So very simple. It's very simple. Employee 192, the tax will be deducted at what rate? Average rate. Nothing but whatever total tax liability of the employee will be split into 12 months. As and when we get new information about employee, we update the tax liability, and whatever already deducted, balance will come, yet to be deducted in the next month, we will deduct it. That's it. So this is how TDS on employees will work. Now for TDS on employee, when you need to deduct the TDS? At the time of payment only. No need to deduct at the time when you are recognizing as an expenditure in books of accounts. Correct? That is what entire this points. Now illustration. Mr. A, the employer, pays a gross salary including allowances and monetary perquisites amounting to 7,30,000 to his manager. Besides, employer provides non-monetary perquisite to him whose value is 1,20,000. The general manager is exercising the option to shift out of default tax regime. Option to shift out means what? Normal tax regime is going and pay tax under this. What is the tax implication in the hands of A, the employer and manager? Generally, employer provides non-monetary perquisite, right? Whenever employees are providing, companies are providing non-monetary perquisite, on that tax responsibility also they only take care. Whenever employer is providing non-monetary perquisite, tax responsibility will be taken care by employer. Now you see gross salary including elements is how much? 7,30,000. Yes or no? 7,30,000 minus standard deduction 50,000. What is the net salary? Now what is the benefit of non-monetary perquisite is getting? Let's add it as it's a benefit to him, right? It's an income for him technically. What is the total income? Normal tax regime, age is not given. We assume normal citizen. How much is the tax liability? Up to 5 lakhs 12,500. 3 lakh into 20%, 60,000. Total 72,500 plus 4% says how much it is? 72,500. 4%, 75,400. Correct? But this is his total taxability. On non-monetary perquisite, how much is the tax? On non-monetary, how much is the tax? Very simple, averaging. Yes or no? 75,400 is the tax amount for 8 lakhs income. How much is for 1.2 lakh? Very simple. 75,400 divided by 8 into 1.2 is equal to 11,310. What company will do in this case? Don't worry, this 11,310 I will pay out of my pocket. And remember, under PGBP 40A specifically says, 40A3 or 40A4 subsection, which specifically says employer, if at all paying tax related to non-monetary perquisite of the employee, no deduction, because that's his tax liability you are paying. You can't claim it as business expenditure. Yes or no? So 11,300 I paid. Now employee balance amount is what? 75,400 minus 11,310. How much is that? 75,400 minus 11,310. 64,090. This amount I will deduct from employee in equal installments over 12 months. Average. Understood? Look at this. Yes or no? This average. What is the average rate here? Nothing but, by the way, what total tax divided by total income. That much is average rate. This is the average rate of tax. So 11,310, how much? This amount will be paid by employer. This will be exempted in the hands of the employee, 1010C. Yes or no? That's a 1010cc. And whereas balance amount will be deducted from salary of the employee. Further, 11,310 employer is bearing out of his pocket, right? Can he claim it as a business deduction because it is exclusively and wholly incurred for the purpose of business? No. 40A, it specifically disallows this. Clear? That is what they are asking. Next, can I proceed to the next? Everything else is clear. Now here one more thing. Suppose SSE said, sir, I want to go with normal tax regime, not default tax regime. These are all my deductions, he said, amounts and all. You need to ask proof. For house rent elements, you need to ask name, address, PAN of the landlord. Where aggregate rent paid is exceeding 1 lakh. Ask rental agreement. Take PAN number of the owner. Leave travel assistant. We will ask expenditure of travel tickets, all that. Deductions under house property, we will ask name, address, PAN of the lender, nothing but we will ask bank statement, loan statements. Deductions, we will ask proof of investments. All this is necessary if the SSE is choosing normal tax regime. If the SSE is choosing optional, no, these all will not be there. No, happy or no. That's it. 193. Next section, 192 over. So the tax is deducted by employer at the time of payment of salary to employee at average rate of tax. How to arrive average rate of tax? First, find out total income. Ignoring exemption given under 1010cc. Non-monetary perquisite given by employer, no. That actually tax it in the hands of employee first. Technically it is exempted. Getting the point? So first tax it. Identify the tax amount. Divided by total income average. Apply that average on the non-monetary perquisite value. You will get tax amount on the non-monetary perquisite which employer will bear. Remaining amount will be deducted from employee. Getting it? Next, interest on securities. So interest on securities means what? Debentures, shares, debentures, bonds and all. So every person has to deduct interest on, deduct a TDS on interest on securities. Yes or no? So time of deduction is what? At the time of credit or at the time of payment, whichever is earlier. Time of credit, the section introduction itself. Time of payment, time of credit, whichever is earlier. Yes or no? When you should deduct the tax? At what rate you should deduct the tax? Here they have given 10%. When you should deduct the tax? In case if the dividend is paid by a public company. Sorry, TDS on interest on securities is applicable. TDS on interest on securities is applicable for all SSEs. Flat 10% applicable. But they have given certain exemptions. When TDS on interest on securities is not applicable, if at all you are paying interest on national development bond, if you are paying interest on NSCs, if you are paying interest on debentures issued by these institutions, land mortgage bank, cooperative land bank, primary cooperative society like this, yes or no? If you are paying interest on government or state government securities, if at all interest is paid by public companies, that to whom? Individual or HUF. If the interest on security is paid by a public company, it may be listed or unlisted. Interest should be paid by account payee check, and the interest amount shall not exceed 5,000. 5,000 threshold limit under 193 is there only if the interest is paid by the public company on what? Debentures only. On only debentures. If a public company is paying interest on debentures to individual and HUF, 5,000 threshold limit apply. Up to 5,000 no TDS. The moment it cross 5,000 on entire amount 10% flat. TDS limits are mostly threshold limits. Mostly they are all threshold limits. Only 194N cash withdrawal is a slab limit. Up to 20 lakhs, no TDS. Beyond 20 lakh to 1 crore, 2%. Beyond 1 crore, 5%. That we'll discuss later. You clear? And if at all interest is paid on securities to LIC, all that, no deduction. No TDS to be deducted. So which means any payer, any person who is paying interest on securities is what this fellow borrowed by issuing securities, TDS is applicable. When it is exempted, if the interest is paid on securities given to LIC, securities are allotted to whom? LIC, GIC. If the interest is paid to government, if the interest is paid to any corporate society, public sector or institution, if the interest is paid on NSC certificates, if the interest is paid on national development, if the interest is paid by public companies or to individual or HUF, where the interest amount shall not exceed 5,000. By the way, this is at one time or throughout the year? Throughout the year. TDS limits mostly or throughout the year. Are you clear? 193 is over. Then 194A. In 194A, cooperative society point is what mostly confusing to many students. Do you remember that? First of all, 194A. What is 194A? 194A is also you are paying interest only. You are paying what expenditure? Interest only. Other than interest on securities. Like I borrowed loan from my friend. I am paying interest. 194A TDS will apply. Bank borrowed loan from depositors. That's called deposits, time deposits, fixed deposit, recurring deposits. They are paying interest. That is liable for TDS. Now tell me, 194A, at what time TDS has to be deducted? The deduction must be at the time of credit or at the time of payment, whichever is earlier. Time of credit or time of payment, whichever is earlier. Yes or no? Now, at what rate? Straight away 10%. Straight away 10%. However, TDS will not apply if the total amount of interest paid during the year does not exceed 5,000 rupees. However, if at all interest amount is paid by bank, cooperative bank, post office, and the interest is credited is paid under notified scheme of post office. If the interest is paid by a banking company, interest is paid by a cooperative bank, interest is paid by some post office, then the threshold limit is 40,000 rupees. Then the threshold limit is what? 40,000 rupees. Further, if the recipient is an individual and also a senior citizen, then the threshold limit is 50,000 rupees. Yes or no? Normally, if I pay interest, I am not a bank. Threshold limit is 5,000. The moment it crosses 5,000, 10% flat deduction applicable. The moment it crosses 40,000 in case of a bank payer, 10% flat on the entire amount of interest. The moment it crosses 50,000 in case of senior citizen, flat 10%. Now, bank is paying interest, right? Yes or no? How this interest is to be calculated by a bank? Branch wise or total banking company wise? In case if the bank has adopted core banking solution software. In case bank has adopted core banking solution software. whether State Bank of India, Nungambakam Chennai branch paid, Mylapore Chennai branch paid, or Saidapet Chennai branch paid, or Annanagar Chennai branch paid, it doesn't matter. To the customer from State Bank of India through 10 branches, 20 branches, 30 branches, doesn't matter. The customer has 1 lakh deposit with every bank, where every branch will pay less than 40,000 interest yearly. So customer cleverly did, but we have a central banking software, core banking. We know how much as a total bank wise we are paying you. If it cross 40,000, on entire 40,000 TDS will be applicable. Are you clear? If at all bank does not have core banking solution, which is rare, now it is not there, then each branch wise the limit will be applied. Understood or not? So this is the first exemption under 194A. First exemption under 194A is what? Generally on interest, whatever interest you are paying, flat 10%. However, if the interest amount is not exceeding 5,000, no TDS. If the bank is paying interest at the time, threshold limit is 40,000. Senior citizen threshold limit is 50,000. Not only that, if at all the interest is paid by a firm to partner, if a partnership firm is paying interest to their partner, for the firm up to 12% they can claim deduction. In the hands of partner, up to 12% is taxable under PGBP income. Yes or no? 40B assessment of firms, it clearly says that. So interest paid or credited by firm to its partner, no need to deduct TDS. Same way, interest paid or in this, this is important point. A is important point, exemptions. Then E and F. This is where mostly people confuse. Many students confuse at E and F point. Now, suppose interest is paid by what? Cooperative society. Interest is paid by cooperative society. Which cooperative society? Other than cooperative bank. Which society? Other than cooperative bank. By the way, interest is paid by society other than cooperative bank. Suppose if it is a cooperative bank, 40,000 threshold. Senior citizen, 50,000 threshold. Yes or no? This threshold is applicable only if the SS is individual and HUF. Normally it is not applicable. Threshold limit is not applicable. Yes or no? I hope you have seen it. Yes or no? Where the payer is so and so. Further, if the if the SS is a senior citizen, then how much it is? 50,000. 50,000. Now you see, if interest is paid by cooperative society other than cooperative bank. If it is cooperative bank, straight away 40,000 threshold. Straight away 50,000 threshold in case of senior citizen. Payment to senior citizen. No, this is normally a society, not a bank. It's not a cooperative bank. It's a cooperative society. Just a cooperative society registered under Cooperative Societies Act. Or it's a multi-state cooperative society registered under Multi-State Cooperative Societies Act. We are paying interest to my member who has deposited with me some money. Should I deduct TDS? No. I am paying interest on deposit by another society. I am a society. In my society, another cooperative society is keeping some money and I am paying interest to them. No need. So see, that's why I clearly wrote interest paid by society to members or to another society. No TDS applicable. This provision is not applicable for whom? Other than cooperative banks. Second, another exemption for society. Suppose interest is paid by primary agriculture credit societies, primary credit societies, cooperative society land mortgage bank, cooperative land development bank. If the interest is paid, they will tell you, you see, interest income credited or paid in respect of deposits with, means deposit is with whom? This one. Means interest is paid by whom? These people. Yes or no? If the interest is paid by primary agriculture credit society, if the interest is paid by primary credit society, if the interest is paid by cooperative land mortgage bank, if the interest is paid by cooperative land development bank, these are all cooperative banks. They are straight away exempted. Normal cooperative bank which does not come in here. Normal cooperative bank which does not come here. 40,000 threshold limit, 50,000 in case of senior citizen. If a cooperative bank is coming under PACS, primary agriculture cooperative society, or primary credit society, cooperative land mortgage bank, cooperative land development bank, then TDS is 0. Are you clear? They have given exemption to cooperative society, right? They have given exemption to primary agriculture credit society, primary credit society, land development bank, land mortgage bank, yes or no? They have given benefits, right, to societies. This benefit is not available. This benefit is not available if preceding financial year turnover of these societies is exceeding 50 crore. If preceding financial year turnover is exceeding 50 crore and one more condition, interest paid is likely to exceed 40,000 or 50,000 in case of senior citizen, which means if I am a cooperative society paying interest to my member, TDS is 0. But if my society turnover in the last year is more than 50 crore, this exemption will not apply. As usual provision, 40,000, 50,000 limit I need to check and then deduct. Suppose my turnover in the last year is less than 50 crore. 194A itself will not apply, which means I paid 10 lakhs interest, no TDS. You clear? If at all a normal corporate society, primary agriculture credit society, primary credit society, land mortgage bank, land development bank, I'm telling you TDS, if at all you're clear with this session itself, I'll promise you, you will get full marks in TDS, pakka 5 marks. Getting it? Keenfully listen. If society is paying interest to member, if primary agriculture credit society is paying interest, primary credit society paying interest, land mortgage bank paying interest, cooperative land mortgage bank, cooperative land development bank paying interest, these are all corporate societies, interest will, TDS will not apply. Or society pay interest to another society, TDS will not apply. TDS, interest paid by corporate society to another corporate society, interest will not apply. This exemption is not applicable for cooperative bank. By the way, remember, cooperative banks no exemption. 40,000, 50,000 limit as usual. Normal cooperative societies are there, right? If they are paying interest to members or they are paying interest to another society, no TDS. However, this exemption will be withdrawn when big societies. If the society is very big, no exemption. When it is called as a big corporate society, if previous year turnover is exceeding 50 crore, no exemption. If no exemption means what limit you should apply? 40,000, 50,000, if at all payment cross, you should deduct 10% TDS. Over, that's it. Understood? This is corporate society provision. Again, after uploaded in the YouTube, you once again watch if at all you have a confusion. Very crystal clearly I told. Now, in this the second point is what for many students it confuses. This point is not valid. Deposits other than time deposits on or after 1995. Exemption is given for deposits made before 1995. Irrelevant now, right? Yes or no? That's why that point is not valid now. Getting it? Because students will study this point, they will not understand this entire logic. You should read entire individually this point, and the exemption withdrawn point. Then finally you should see when exemption is withdrawn, what is the consequence? First they gave TDS 10% applicable. Then they said exemption is available. When exemption will be withdrawn, they said. If exemption is withdrawn, what is the consequence, they said. That's how the entire section is drafted. Clear? And of course, interest is credited or paid by central government. If central government is paying interest, no TDS is applicable. If interest is paid or credited to bank, I borrowed housing loan from SBI. I am paying interest every year. Should I take TDS? Huh? No. Financial corporations, life insurance corporation, companies and corporate societies carrying on insurance business, Unit Trust of India, notified institutions and bodies. For these and all, if I pay interest, no problem. Further, interest paid. Yeah, that's it. That's enough actually. In 193, one point I have to cover actually. In 193, interest on securities, right? Interest on securities. TDS will not apply on interest on securities paid by some institution or authority or public company, whatever it is, as notified by government. Government notified two corporations. What are they? Power Finance Corporation Limited, Indian Railway Finance Corporation Limited. Both of them are notified under 54 EC also. Power Finance Corporation, Indian Railway. If they are paying any interest, no. On securities they are issuing, long-term finance securities, TDS will not apply. That one exemption you have to remember. This Power Finance Corporation, this one, there is a possibility that they will ask. In MTP last time, May 24, they asked this. Getting it? Next. So 194A, that's it. 194A, are you clear? So what is 194A is saying? Interest paid on any interest paid other than interest on securities is liable for TDS at 10%. Exemption, if it is not exceeding 5,000. Another exemption for banks, 40,000, 50,000 in case of senior citizen. For corporate society, if they are paying to member, no TDS. If they are paying to another society, no TDS. If the society is a primary agriculture credit society, primary credit society, cooperative land development bank, cooperative land mortgage bank, no TDS. However, this exemption will be withdrawn if this is a big society. Means previous year turnover is more than 50 crore and now interest limit 40,000, 50,000 limit as usual applicable. Understood? That's it. So for corporate society, interest limit is 40,000 and 50,000. That too, this limit is applicable when previous year turnover is more than 50 crore. Otherwise, society paying interest to members, society paying to another society, no TDS applicable. Correct? Next, income credited or paid by, actually in society much more interpretation is there, but that's not required now in revision class. Income credited or income credited by motor accident claim tribunal, interest credited by motor. Some motor accident claim tribunal ordered on insurance company pay interest. Insurance company credited in books of accounts, but they didn't pay. No need to deduct TDS. Generally, credit or paid, whichever is earlier, right? But in case of interest amount that you are paying to the insured guy, because of MACT tribunal order, you just credited, you have not yet paid, no need to deduct. But if you're paying him, you should deduct if the amount is exceeding 50. Up to 50,000 rupees, no need to deduct TDS. If insurance company is paying interest to the insured because of a tribunal order, that is which tribunal? Motor accident claim tribunal. If the interest amount does not exceed 50,000, no TDS. If it crosses 50,000, flat 10%. Clear? Remaining is not that required. Now, tell me, in this section, TDS is applicable only on what? Time deposits. Time deposits means what? Fixed deposit or recurring deposit. Time deposits mean deposits kept for a certain specific period. So we call them as what? Time deposits. Now, senior citizen means what? Obviously resident in India. Getting it? Now, what are the TDS implications? 1st October, Harish made 6 months fixed deposit, 10 lakhs at 9%. This is maturing on 31st March. 6 months, right? 10 lakhs into rate of interest 9% into 6 by 12. Since the amount is exceeding 40,000, cooperative bank. 40,000, since amount is exceeding, straight away 10%. What is it? 4,500. Next, on 1st June, Mr. Ganesh made 9 months deposits of 3 lakhs each, carrying 9% with Dwarka branch, Janakpuri branch, and Rohini branch of XYZ. Same bank, but multiple branches, and bank has CBS. In such case, all the branch put together, total interest paid, how much you should see? Yes or no? How much is the deposit? 3 lakhs into 3 branches. Into what's the rate of interest? 9% into 9 divided by 12. How much? 60,750. Since it crossed 40,000 rupees, straight away flat 10%. How much? 6,075. Clear? Easy or not? Where is the amount here? They 6,075. Where they mentioned? Second line, they didn't mention that amount, I think. They has to be deducted 10%. Correct. Okay. Then recurring, on 1st October, Mr. Rajesh started 6 months recurring deposit of 2 lakhs per month, 8% per annum with Peak Year Bank. The recurring deposit matures on 31st March. When every month amount of deposit is equal, I can apply arithmetic mean. Opening balance plus closing balance by 2. Yes or no? Opening balance 1st October 2 lakhs. Every month 2 lakhs is paying. By March 31st it is 12 lakhs balance. Yes or no? Opening is 2, closing is 12. So opening plus closing 12 divided by 2, 7 lakhs is the average outstanding. Yes or no? 7 lakhs multiplied by 8% per annum. But remember, yes or no? 8% per annum. But remember, it is only for 6 months. 28,000 you will get. 28. Since it is now, by the way, how much it is? 28,000. Since it is less than 40,000, no TDS. That's it. 194A is over. Clear? Next, 194C, payment to contractors. Payment to contractors. I will come back to 194C at last, not now, because 194C according to me is a residuary section. According to me, 194C is like a residuary section. Next, 194H. We have in between 192A, 192D, 194D, 194DA, 194 I, all that were there. We'll discuss that later. So now let's go with this order. 194H. What is 194H? Commission or brokerage. Which commission or brokerage? Other than insurance commission. Insurance commission is there under 194D. No, DA. 194 DA. Insurance commission is discussed under 194 DA. Not that, I think. G. 194 G. DA is regarding (194) B. lotteries. 194 BB, horse races and all. Yes or no? 194 BA, online games. 194 G, insurance commission. Okay. Commission on lottery tickets. Yes. Commission on lottery tickets. Then insurance commission. P, Delhi. 1 minute. Delhi, D only, na? Correct only. Fine. 194. 194 is dividend. 194 is dividend. Immediate section is 194D, which is actually dealing with the insurance commission. 194DA is dealing with life insurance maturity amount. 194 BBA, BBA. They are all dealing with lotteries. Yes. Perfect. Yes, 5%. Analysis lab. So 194D, insurance commission. So there also insurance commission rate of TDS is 5% only there also, but that we'll discuss in a tabular format at below. Okay, now 194H is what? Commission or brokerage. You know, there are 6 sections. There are 6 sections, I will tell you. 194A, 194C, 194H, 194I, 194J, 194R. These 6 sections, they do not apply to individual or HUF. If the deductor, suppose if the payer, suppose I am the person paying, I am an individual or HUF, I am engaged in business only, but my turnover is less than 1 crore, not exceeding 1 crore, or my gross receipts are less than or equal to 50 lakhs. For them, these sections will not apply. What is it? Hijack. HIJ. But actually no, R is also there. Once upon a time, hijack code is applicable. Reject R. That's okay. Okay. 6 sections. TDS is not applicable for an individual payer, for a HUF payer whose business turnover does not exceed 1 crore, gross receipt does not exceed 50. For all of them, 194M provision is there. For all these cases, what provision is there? 194M. Technically not all this. Technically 194A, 194C, 194J. For all of this is there. For rent substitute, 194IB is there. Parallel provision is what? 194IB is there. This provision is specifically applicable for individual or HUF who come under this. Correct? And even 194M is specifically applicable for these people. Correct? Fine. So in all these 6 sections, TDS provision will not apply for individual or HUF whose business turnover is less than 1 crore, whose professional receipts are less than 50 lakhs. Now, so what is the rate of TDS? 5%. Time of deduction, time of credit or payment, whichever is earlier. Threshold limit is what? 15,000 per annum. This is yearly limit. And what is commission or brokerage? Whatever the meaning they have given, I don't think that discussion is required. So then, yeah, in this one case study is there. What about TDS applicability? Let us look at this question. Moon TV. What is it? Moon TV, a television channel, made a payment of 50 lakh rupee to a production house for production of program for telecasting as per specification given by the channel. The copyright of the program is also transferred to Moon TV. Would such payment be liable for tax? See, simple. If I am paying only for telecasting, advertising the money, getting the point. So that amount will come under 194C. You have seen this? You have seen this provision and all? This entire provision like 194 applicability of. So is the amount is paid to advertising agency, or are you paying for advertising agency relating to some television channel or news company? There are 2 types of payment. That applicability of TDS, suppose they are designing the ad and are also telecasting it. Generally that comes under contracts. 194C is applicable. That is what the clarification they give. The clarification given is, if at all they are designing the ad and are also telecasting. Even broadcasting, telecasting also comes under what? 194C only. Getting it? So that's not a big deal. Now, not that interpretation is required. 194I, rent. Like when TDS is applicable on rent, yearly limit is what? 2.4 lakh. What is the yearly limit? 2,40,000 rupees. What is the rate of TDS? I am paying rent, 1 for movable items, 2 for immovable items. For immovable property, rate of TDS is 10%. For movable property, rate of TDS is 2%. Whether it is movable property renta, immovable property renta, it is irrelevant. To that fellow, yearly how much you are paying? 2,40,000 crossed, TDS is applicable. The moment it crossed 2,40,000, whether you paid for movable portion or immovable portion, doesn't matter, TDS is applicable. Now at what rate you should deduct? On movable property rental income, 2%. On immovable property rental portion, 10%. That's it. Whether 2,40,000 for movable or immovable, that discussion will not come. When we are checking 2,40,000 threshold limit, how much rent you paid to that single owner, you tell me. 2,40,000 crossed. Yes, crossed. Now deduct TDS. At what rate? Movable property rent how much? 2%. Immovable property rent how much? 10%. That's it. So I'm not repeating anything here. Okay. Now here there is a charges paid to cold storages. Charges paid to cold storages is not like a immovable property rent. You are mainly that's a composite service which involves not only storage, rent, premises, but also involves cooling function, all that. It's a works contract. Getting it? 194C will apply. Then this is airline passenger service fee. They said very simple, 194I will not attract airline passenger fee. Getting it? This is some amount per each traveler the airport authority will collect. Getting it? That's not required, no issue. That's not required. That's not a big adjustment. Then, by the way, should we deduct TDS on service tax and GST portion also? No. If the bill contains a specific breakup, because no, renting of immovable property is a declared service. Correct? Declared service. Oh, you don't have declared list. Okay, fine. Sorry. Fine. Declare in supply, no, there are some services which are treated as by default deemed to be service. GST. In that, one of the item is renting of immovable property. I studied GST long ago. Long means long of the longest. You are writing exam next month. Fine, leave it. Renting of immovable property, GST applicable or not? Residential property alone is not applicable. All non-residential purpose applicable. So, I am a tenant. My owner is asking me to pay GST also. I am paying. For me, input tax I will get. That's a different story. But I am paying GST also. 1 lakh rent, 18% GST, 1,18,000. Should I deduct TDS on 1,18,000 or 1 lakh? Don't say less than 2 lakhs, 2,40,000, sir, no TDS. I am talking monthly rent. Getting it? So on 1 lakh only TDS will be applicable. Whether you call it as service tax, whether you call it as GST. This clarification originally was for service tax earlier. Later it was implemented to GST. That's it. Now, sometimes you buy, you take assets on lease. If you pay upfront lease amount, like you are not paying monthly, will TDS provision under 194I apply? No. If at all you are paying upfront amount, 194I provision will not apply. Next. Very simple. XYZ Limited pays 50,000 per month as rent to Kishore for a building in which one of its branches is situated. Discuss TDS provision. This is a company, not an individual or HUF. For every payer, no exemption under 194I. Straight away they have to deduct TDS if at all annual amount exceeds 2,40,000. So 6 lakhs multiplied by 10%, how much it is? 60,000 TDS is applicable. That's it. You're clear, right? Next. This one, should I cover this one also right now, immediately? No? Okay, fine. So we'll stop. We'll continue the remaining provisions in the next section. Next session, 1 more hour. Probably 1 more hour, we'll be finishing the entire TDS. Are you getting confidence? That's it. Take care. Yeah. So in the previous session, we are discussing about 194I, right? Now let's discuss 194IB. 194IB. Before 194IB, there is another section called 194IA. All the amounts where TDS is to be deducted generally at the time of payment, they were all discussed at below. in one table. These are all generally amounts which are to be deducted at the time of credit or payment, whichever is earlier. But this one section is little like different. Here you have to deduct TDS at the end of the financial year, last month in the financial year or last month of the tenancy. Suppose in this year you are vacating the premises. After you occupy, somewhere before March itself you are vacating. Then which month you are vacating? For that month, whatever rent is there, from that you need to deduct the TDS. So section 194 IB, this is applicable for SSE who are specifically individual or HUF, whose turnover is less than 1 crore, whose business or profession is, yes, getting it, 50 lakhs. Furthermore, it is applicable and the threshold limit is 50,000 per month. For every month, what is the threshold limit? 50,000. Or even for part of a month, even for one day, you are paying more than 50,000. An amount to anybody for immovable property. If this section is, this provision is applicable. And time of deduction, the time of credit of such rent for the last month of the previous year or last month of the tenancy if the property is vacated during the year, as the case may be, to the account of the payee or at the time of payment thereof in cash or by issue of check or whatever, whichever is earlier. So, to the account of the payee, time of credit to the account of the payee, nothing but the moment you record outstanding entry for the last month or the actual payment in that last month, related month, whichever is earlier. Now, if at all the deductee is not submitting PAN number, there is a section called 206A, non-submission of PAN number, getting it, and 206AB also is there, which is dealing with non-filing of returns by the deductees. If at all the recipients are not filing returns, there are higher rate of TDS to be deducted. So that's it, we'll discuss later. So if at all PAN number is not given, then TDS will be deducted at a higher rate as per the rate given under 206AA. What is 206AA says? At the rate given in the section, at the rate given in the Finance Act, or 20% among this, whichever is higher. For this point of view, from this point of view, the section Finance Act rate and the normal section rate both are same. 20% whichever is higher means 20 or 5 whichever is higher 20. Now in that case, whenever you are deducting under 206AA, as per 206AA, higher deduction when you are deducting, because the other party has not given PAN number, the total amount of TDS shall not exceed the last month rent that we are paying. The total amount of TDS shall not exceed the last month TDS that we are paying. Whereas normal cases, PAN number, everything is given. 5% of the TDS you will compute on all the months of rent, provided each month rent is more than 50,000 rupees. Each month rent is more than 50,000. Then only, yes or no? So let us say they have given an example. Suppose X is salaried employee paying a rent of 55,000 per month to Y from June 2023, which means from which month? June month onwards, which means 10 months up to March. Is he required to deduct tax at source? If so, when is he required to deduct tax? Compute amount of tax to be payable. He is a salaried employee, which means he is not a business person. This section is applicable for whom? Any person whose turnover is less than 1 crore or gross receipts are less than 50 lakhs. If at all I don't have business income at all, that also comes under less than 1 crore turnover, simply speaking. Are you getting it? So non-businesses is for all of them, this section will be applicable. Suppose if I take a function hall and rent and I'm paying for one day some 1 lakh rupee, this section is applicable to me. You are getting the point now. So because one day amount you are paying more than 1 lakh, which means in a month you are paying more than 50,000. 5% TD is applicable. So now, so this is question number 1. What is the amount? 55,000 multiplied by 10 months is equal to 5,50,000 multiplied by 5%. 27,500 is the TDS, correct? What would your answer change? If at all X vacated the premises on 31st December only, in that case it is 7 months rent only. 5,55,000 multiplied by 7 months, 3,85,000 multiplied by 5%. How much it is? 19,250. This is the answer. Third question. What would be answer if at all he does not provide the TAN number? In that case, this instead of 5, it is 20%. How much it will be? 1,10,000. But it cannot exceed March month rent. What is a March month rent? 55,000. Correct? What is your answer? If it is December itself we vacated, but PAN number is not provided. PAN number is not provided. Directly instead of 5, what is the percentage we apply? 20. 20 means what? 38,500, 35,70. 77,000. How much it is? 77,000. Yes or no? But it cannot exceed December month rent. It cannot exceed 55,000. That's the answer. Easy. So you can find the answers here. Then we have fees for professional and technical services. Actually here 5 payments are discussed: fees for professional service, fees for technical service, royalty and remuneration. Royalty, non-compete fee, and directors remuneration. Remuneration to directors. 5 types of payments are covered: fees for technical service, fees for professional service, royalty, non-compete fee, and directors remuneration. For each category, separate threshold limit is given. For each category, separate threshold limit is given. What is the threshold limit given for each category? For technical services, 30,000 per annum. For professional services, 30,000 per annum. For royalty, whether you are paying royalty for cinematographic or whether you are paying other royalty, doesn't matter. Total royalty, how much you are paying? 30,000. Or any remuneration for directors, to a director, what is the limit? 0. Whereas non-compete fee again 30. So for out of 5, except director remuneration, for all other amounts that are payable are subject to 94J, where there is a separate limit of 30,000. So what is the rate of TDS under 194J? For technical services and royalty for film purpose, cinematic, getting it 2%. Remaining all other royalties 10%. All professional fee, non-compete fee, director remuneration, all these cases 10%. Only for royalty in case of cinema exhibition, getting it, as well as fees for technical services, 2% royalty applicable. Sorry, 2% TDS is applicable. Other royalty, professional service, non-compete fee, director remuneration, straight away TDS rate is what? 10%. The threshold limit 30,000 is per annum. You have to see per annum. That's it. For example, XYZ Limited is a company which is making payment of 28,000 to Ganesh on 2nd August towards professional fee, and another payment of 25 was paid. Both put together crossed already 30, but it was paid for him technical services. Since both are two different services, 30 for professional service, 30 for technical, since both the payments are less than 30 throughout the year, no TDS under 194J. Easy. Yes or no? So that's enough under 194J. Like what do you mean by professional service? In this element alone, let us look at. Professional service means what? It means a person carrying on legal, medical, engineering, architecture, accountancy, technical consultancy, interior decoration, advertising, or such other professional, and some other professional notified by CBDT. Four notified. What are they? Authorized representative, film artist, company secretary, information technology. Are you getting it? Next. What I mean by fees for technical services? Managerial service, technical service, consultancy service, and provision of service for technical or some other professional. This interpretation and all not that required at this level. Getting it? In reality, if you are facing a situation whether a service to be classified as a technical service or professional, that time you can, depending upon the facts and circumstances, there are so many judgments available. That time, for subject, for exam point of view, that discussion is not relevant. Next. Then 194M. 194M is for 3 types of payments. Contract payment. Yes or no? For carrying out any work in pursuance of contract, including supply of labor for carrying out any work, as well as commission, not insurance commission. They have professional services. By way of fees for professional services. Now, for all these 3 cases, the TDS is applicable if at all the individual or HUF. Which individual or HUF? Who does not have a business income or who have a business turnover less than 1 crore, profession less than 50. If at all he is making a payment of more than 50 lakh, what is the rate of TDS applicable? 5%. Straight away 5%. In all these cases, straight away 5%. I forgot to mention one point here. You know, here individual and HUF, they are exempted, right? Just a minute. There's one important observation. Just 1 minute. I'm just. Yeah. This is very important. There is a high possibility of MCQ. Now, individual and HUF, Generally, what is the provision? What we know, there are 6 sections that are not applicable to individual and HUF, whose turnover is less than 1 crore, whose professional receipts are less than 50 lakh. Now 194J generally not applicable, right? Only towards 2 items. Fees for professional service, fees for technical service, only that exemption. Suppose if at all an individual or HUF, my turnover is less than 50 lakh or my turnover is less than 1 crore. Getting it? Receipts are less than 50 lakh. But I'm paying royalty to somebody. 30,000 limit is applicable to me and I have to deduct TDS. I have to deduct TDS. So that was the interpretation. That was the interpretation. Getting it? Since it can be inferred that individuals in HF not required to deduct TDS under 194J on royalty and non-compete. Let me correct this little bit. What are they saying is, for individuals in HUF, when this section is applicable, when their gross turnover is exceeding 1 crore, or when professional receipts are exceeding 50 lakh. This limit is applicable only for these two. You are getting it? This limit is applicable only for these two. Rather than that way, this way is best. This limit is applicable only for these two fees. Royalty, non-compete fee, this provision will not apply for individuals and all. This is actually a loophole in the law. This exception was drafted long ago. This exception was being revised but not fully revised. You are getting it? When original section, no, only these two were covered. Professional service and technical only covered in the original 194J. Later royalties added, director remuneration added, non-compete fee. These are all added later through various finance acts. You are getting the point? In the original section, only these two were covered. Exception also these two are only covered. Understood? So that's how the loophole arised. That's it. Actually, it's a loophole in law. It's not the intention of the law. Next. But that much depth is not required. Basic provision, if you understand enough, totally 5 categories of payments. Two types of payments or 2% rate of TDS. And royalty, it has 2 classifications. Royalty for cinematographic films, distribution and exhibition, 2%. Other royalty, 10%. Professional service, fees for non-compete fee and direct remuneration, all these cases, 10%. Threshold limit is always 30,000 for each category except direct remuneration. Direct remuneration, there is no threshold limit. Then they're adding, no, they forgot to put, that's it. It's not that they don't want to give any threshold limit. Next. Then 194M, only 3 types of fees. 194C related, commission 194H related, professional services 194J related. Only for these 3, 5% TDS is applicable if at all an individual or HUF paying any sum to any person exceeding 50 lakh. Exceeding what? 50 lakh. Straight away, what is the amount of TDS applicable? 5% straight away. So on this we have some problems. For example, examine whether TDS provisions are applicable. If so, under what section? Specify the rate of TDS applicable for all the payments. Mr. Ganesh, an individual carrying on retail business with a turnover of 2.5 crore in the previous year, 22-23. By the way, we are doing 23-24. Suppose Mr. Ganesh is an individual carrying on retail business with a turnover 2.5 crore. Previous financial year turnover is exceeding 1 crore, which means all those 6 sections are applicable. Now here we are paying contract payment for residential. Actually 194J, 194C, both these sections will not apply if at all payment is for residential purpose, personal purpose, not related to business. Whereas 194M is applicable whether it is personal or professional, doesn't matter. Personal purpose also it is applicable. But 194M is applicable when, if the amount is crossing 50 lakh. If the amount is crossing 50 lakh. So contract payment for repair of residential house, 5 lakh we paid. Actually contract payment in a year crossed how much? 1 lakh. But since it is residential purpose, no TDS. Correct? Payment of commission to Wallish for business purpose. Since it crossed 15,000 rupees, for commission threshold limit is what? 15,000. 194H. Yes or no? 194H is applicable because its turnover is 2.5 crore in the preceding financial year. No exemption. Correct? Next. Mr. Rajesh, a wholesale trader whose turnover for 95 lakhs, means all the 6 sections exempted. All the 6 sections are exempted. Contract payment he made for residential house. How much he paid? Made during Jan to March. 20 lakhs in January, 15 lakhs in February, 20 lakhs in March. All put together 20, 20, 15. 55 lakhs he paid. Previous turnover is less than 1 crore. 194C will not apply. 194M will apply. Since it crossed 550 lakh, 5% TDS will apply. They are only asking whether TDS is applicable or not. If so, rate. They are not asking you to compute amount. Next, Mr. Satish, a salaried individual. What is he doing? He is paying brokerage for buying residential house. Brokerage is covered, professional fee is covered, contract fee. Only these three are covered under 94M. How much amount is paid? 50 lakhs crossed. So therefore 5% TDS applicable under 94M. Dheeraj, a pensioner, means salaried employee. Contract payment made during October to November so and so reconstruction, but amount paid is not exceeding 50, therefore no TDS. That's it. Next. Easy. Then we have a provision on TDS on cash withdrawal. Cash withdrawal provision is very simple. Section 194N provides every person being a bank or cooperative bank or society. If at all they are paying any sum in excess of 1 crore to any person from one or more accounts maintained by such recipient person, which means with a bank, you may be maintaining one bank account or multiple bank accounts, doesn't matter. Customer wise it will be calculated. Suppose I'm having which HDFC bank savings account, current account, various other two savings accounts I have, two current accounts I have. From all the four accounts put together, if my total withdrawal is exceeding 1 crore, what is the rate of TDS? 2% straight away. What is the rate of TDS? 2%. Suppose if the account holder is a cooperative society withdrawing cash from the bank, then 3 crore is the threshold limit, which means for a society, only if it crossed 3 crore the cash withdrawal, 2% TDS will be applicable. Correct? By the way, here it is not threshold limit, it is only the extra. For 194N alone, it is considered as a slab limit. It is considered as what? Slab limit. So up to that TDS will not apply. Once it crossed that amount, TDS will apply. Now look at it. Time of deduction. It is to be made at the time of payment, obviously. Now suppose there is one more penalty provision kind of, or I can say there is a severe TDS. I mean, they are deducting higher TDS. If at all the customer is a non-filer. If the customer is a non-filer, if at all the customer does not file return of income for all the last 3 years, any 1 year filed also, this provision will not apply, exception will not apply. If at all he is not at all filed in all the 3 previous year, then instead of 1 crore, 20 lakhs is the threshold limit. The moment cash withdrawal cross 20 lakh, 2% TDS will apply up to 1 crore amount of withdrawal. The moment it cross 1 crore, on the extra amount pay on 1 crore, 5% applicable. Whereas for cooperative society, from 20 lakhs to 3 crore, 2%. More than 3 crore, 5%. Are you getting it? That's it. That's it. So that is with respect to, additional rate of TDS. Additional rate of TDS is applicable when? If the person has not at all filed the return of income in the past 3 years, then 20 lakh is only threshold limit. Are you clear? All of you. If the recipient, if the customer is society, obviously, 3 crore is the limit applicable, up to 3 crore. But both the cases, 20 lakhs is the lower limit. By default, 1 crore. By default, 1 crore. Up to 1 crore on cash withdrawal, no TDS. But the moment it crosses 1 crore, 2%. But suppose if the customer is not a regular filer of IT return, what do you mean by regular filer? In the last 3 years, he didn't file at all. In such a case, up to 1 crore, the bank will not wait. The moment it crosses 20 lakhs, TDS will be deducted by flat 2%. After 20 lakhs, 2%. Up to what amount? 1 crore. Once it crosses 1 crore, what? How much? 5%. This 1 crore limit will be substituted with 3 crore in case if it is a society. That's the only difference. Next. By the way, if the cash withdrawal is made by government, bank, all these cases, ATM centers, for them it is not applicable. They are all internal government departments, all the TDS and all will not apply on government entities. So for example, they have given some totally 10 cases. Case number 1 to case number 10. Up to 6th case, up to case number 6, they are all filing returns regularly in the past 3 years. Whereas from case number 7 to case number 10, problem number 7 to problem number 10, they did not file return. The persons mentioned in 7 to 10 have not filed the returns in the last 5 years. Actual 3 enough. But they have not filed in the last 5. So which means the higher rate of TDS provision is applicable on cash withdrawal. Now first one, Mr. Harshit, bank, State Bank of India, on which date? 1st July. How much he withdrawn? 1 crore 10 lakh. By the way, this is per month limit per annum. Obviously per annum. So limit, he has filed return. So 1 crore crossed. 10 lakhs into 2%, how much? Pranav, SBI, 90 lakhs. Since it is less than 1 crore, no TDS. ABC Cooperative Society. Society means up to 3 crore, no TDS. XYZ Cooperative Society, 3 crore 10 lakh. Only on the 10 lakhs, 2% TDS, 20,000. Vaibhav, so cooperative bank, he is an individual, remember. Individual means only 1 crore. Up to 1 crore, no TDS. Beyond 1 crore, 2%. 1 crore, 1 lakh into 2%. 2 lakh, 20,000. A limited company, they have limit only up to 1 crore. 5 lakh into 2%, 10,000. Now, whereas case number 7 to 10, case number 7 to 10, they have not filed the return. Suppose a firm, not a society, right? It's a firm. How much? 90 lakh. Up to 20, no TDS. 20 lakhs to 1 crore, 2%. But here it's only 90. So 70 lakhs into 2%, 1 lakh 40. Individual, 1 crore 20. On 80 lakh, 2%. 20 lakh, 5%. Correct? That's it. Rakesh, okay, bank, 1st February, 45 lakh. 25 lakh into 2%, 50,000. 25 lakh into 2%, 50,000. Cooperative society, 3 crore 30. 20 lakh to 3 crore. 2.8 crore into 2%. On extra 30 lakh multiplied by 5%. That's the logic. Easy or not? Next, other TDS provisions. 192A, premature withdrawal of provident fund. Suppose if an employee is withdrawing provident fund contribution before its maturity or before completion of 5 years. Premature means what? Generally you have to withdraw provident fund at the time of retirement. Before retirement, if you withdraw, generally it is treated as taxable. However, there are exemptions. If at all you withdraw after continuous 5 years of service, your PF amount you withdrawn fully exempted. Or you withdrawn before 5 years of service, but you withdrawn because of termination is due to ill health or contract or discontinuance of business, cessation of the employment, company itself closed. Because of that reason, provident fund amount they settled to you. So that time if you withdraw, nothing is taxable. Or cessation, your employment is seized, company fired you. That time they gave you every entire amount, because they fired you, they have to pay you all your obligations, right? Pending obligations, so they paid you that amount. That is the reason, because of your withdrawal. That time also it is not applicable. Ill health, that time also it is not applicable. Or you're changing from one employer to another employer. That time what happens is, from this company, whatever PF is there, I'll withdraw and I'll transfer it to another company. For that purpose you withdrawn, then also this provision will not apply. Otherwise, or if at all you withdrawn after 5 years, no questions asked, straight away exempted. If you withdraw before 5 years, why you withdrawn? Ill health, change of employment, discontinuance of business, or firing. Getting the point? So what reason? If these are the reasons, again no TDS. If other than these reasons, TDS will apply. What is the threshold limit? 50,000 rupees. Total payment made in a year is exceeding 50. Straight away 10% on the amount of withdrawal the moment it crosses 50. And remember, again, this is a threshold limit. Only 194N is a slab limit. Remaining all other TDS provisions are threshold limits. Yes or no? Now, dividend. So what is the dividend threshold limit? 10% rate of TDS, and threshold limit is 5,000 per financial year. However, dividend paid to these institutions, yes or no, government, LIC, GIC, or any other institutions notified, they are not, TDS is not applicable. Next, 194B, 194BA, and 194BB. In all these cases, except 194BA, winnings, these are all actually called as what? Winnings. In one case, winnings is from horse race. In one case, winnings is from lottery, gaming, all that. Whereas BA is for online gaming. For online gaming, no threshold. Whereas remaining all other winnings, 10,000 per annum threshold limit is there. How much is that? 10,000 per annum. Whether it is online gaming or remaining gamings, whatever it is. What is the rate of TDS? 30%. And of course, payment will be made, TDS will be deducted at the time of payment. But for online games, no. You may have not withdrawn from the application. Like you're playing games online, so whatever money you're winning, no. So whenever you win, some money will be added to the ledger. Whenever you lose, some money will be removed. So at the end of the financial year, what is the net winning will be there? What is the net winning amount will be there? On the TDS will be applied. Or suppose you are not waiting up to end of the financial year, you are withdrawing in between itself. That time itself 30% will be deducted. Are you clear? Suppose if the winnings are given in kind, ensure that you collect the tax from him and then release the winning. the non-monetary item. That's it. Next, 194D, insurance commission. What is the threshold limit? 15,000. Even for normal commission, 194H also, threshold limit is 15,000. Getting it? And rate of TDS under 194H as well as 194D both are same, 5%. 194DA, this is regarding maturity amount from insurance policy. 194DA is regarding maturity amount from insurance policy. Which maturity amount other than those which are exempted under 10 clause 10D? Other than those which are exempted under 1010D. Suppose if the amount of maturity from life insurance policy is exempted for you, no TDS. Because that's an exempted income. Suppose if that income is not exempt, then TDS is applicable if the amount paid in a year exceeding 1 lakh, rate of TDS is 5%. Rate of TDS is 5%. On how much amount? On the amount of maturity or income portion? Only income portion. Only income portion. 56 subsection 2 clause 13. That section exactly deals with this. 56 subsection 2 clause 13. They deal with how to calculate income in case of matured policies. Very simple. What is the maturity proceed? Minus what is the total premium paid but not claimed deduction under income tax. What is it? Premium paid and not claimed deduction under income tax. So you will get income portion. Income from maturity amount is calculated like this. Under 56 subsection 2 clause 13, income will be calculated like maturity proceeds minus what is the total premium paid in the past 5 years, 10 years, whatever logic. You're all clear? Getting it? Now, actually on 1010D, there is a big clarification. 1010D, how to calculate this exemption, especially if the premium is, if at all insurance policy is taken on or after 1st April 2022, and the premium payable for a particular policy is exceeding 5 lakh. Remember this? No, you don't know this amendment. So big amendment, other sources. Very big amendment in other sources. Don't worry. In the marathon, whatever I told, right? 1010D amendment I specifically covered. You can find what are all the amendments, whatever amendments that were given in the supplementary book, they are all covered in an amendments video. You can open that. 1010D, very important amendment. There is a high possibility that that will be tested in MCQ or probably in the main exam. 1010D, exemption calculation. Generally, what we know, a policy, I mean, if at all annual premium payable, don't worry, after this session, when I'm uploading in the YouTube, I will upload all those amendments once again. So latest whatever September, I will put thumbnail clearly, heading all that clearly for September amendments applicable. So you just watch that, you will be up to date. So I'm not repeating, you will watch that, right? Yes. So 5% is the TDS if at all any amount, maturity amount withdrawn by the SSE from insurance policy, provided that policy is not exempted. Correct? Then 194G, again, commission on sale of lottery tickets. For this also same threshold limit and same percentage. 194DHG. DHG, D insurance commission, G lottery, commission on sale of lottery tickets, any other commission comes under 194H. In all these cases, the threshold limit per annum is 15,000 rupees and rate of TDS is 5%. Then 194IA, you are purchasing immovable property. Where I am making payment to seller. Since I am the payer, I should deduct TDS. When I should deduct the TDS? If the consideration exceeds 50 lakh or stamp duty value exceeds 50 lakh. Anything. Either consideration or stamp duty value. If at all they are exceeding 50 lakh, then I should deduct a TDS 1% of consideration or stamp duty value, whichever is higher. Getting it? So payment on transfer, if at all consideration for transfer or stamp duty value exceeding 50, then I should deduct, see, very simple, consideration or stamp duty, whichever is higher. Is it crossing 50? Yes, TDS provision applicable. Now at what rate I should deduct? You should deduct 1%. On what amount? Consideration or STB, whichever is higher, on that amount. Deduct that and pay whatever balance consideration that is available. Correct? Next. 194K. This is regarding units, income from units. Generally dividend is different, this is different. Here 5,000 is the threshold limit and 10% is the rate of TDS. 194 LA, compensation on acquisition of certain immovable property. One important point I want to observe here. Here they said no, payment on transfer of immovable property. Immovable property means every immovable property other than rural agricultural land. Other than rural agricultural land. Whereas in 194 LA, actually they say here 194 LA including rural agricultural land. What is it actually? Including rural agricultural land. Technically speaking, it is including rural agricultural land. So here, I mean, one more thing. Other than agricultural land, they said, right? Which agricultural land? This agricultural land includes urban agricultural land also. This agricultural land includes urban agriculture. If at all we are compulsorily acquiring agriculture, simple. If at all government is compulsorily acquiring agricultural land, no TDS. If at all government is compulsorily acquiring any other immovable property, TDS provision under 194 LA is applicable. Whereas you are buying immovable property. You are buying immovable property, excluding rural land alone. On remaining properties, TDS provision we have to check. Whereas here, any agricultural land, no problem. Why? Under 10 subsection 37, compulsory acquisition of urban agricultural land is exempted. So if it is rural, no income at all. Urban agricultural land exempted anyhow under 1037, then what is the necessity of TDS? On that logic, under 194 LA, all agricultural lands are excluded from the purview of TDS. Understood? 194 LA is dealing with compulsory acquisition of immovable property, where government is releasing money. If the amount released is here more than 2.5 lakh, what is the rate of TDS? Straight away 10%. Straight away 10% is the rate of TDS. Suppose I am purchasing immovable property. Only that immovable property if I am purchasing, which is a capital asset. For the other party, it amounts to transfer of capital asset. Then only TDS should be deducted, right? For the other party, it should be generally income, right? Then only TDS. That's why from 194 IA purview, rural agricultural land is removed. Understood? Whereas in 194 LA, all agricultural lands are removed. Why? Rural anyhow removed. Urban why removed? Because compulsory acquisition of urban agricultural land is generally exempt under 10 subsection 37. That's the logic. Understood, all of you? Then 194P. Pension. Here actually there is a concept called specified senior citizen. For this purpose, the section brought another age limit, that is 75. Generally senior citizen means 60 and above. Super senior citizen means 80 and above. Here it is specified senior citizen. Here it is what? Specified senior citizen. This fellow has only pension income. Plus he is having interest income with only one bank. With only one bank. He don't have any other income. In such a case, what this senior citizen can do, who is aged 75 years or more, he cannot go and file IT returns, all that and all not possible, because he's only having pension income, retired person, and he's having only interest income, that too only from one bank, not from multiple banks and all. In such a case, the bank itself will collect all these details and calculate total income tax liability, deduct that entire income tax liability from this senior citizen, and bank itself will remit the entire tax liability in the form of TDS to department, where this specified senior citizen will be given exemption from filing IT return. Where the specified senior citizen will be given exemption from filing IT return. That is the intention behind 194P. In order to relax highly, like senior citizens who are of 75 years and more age from filing return of income, especially those who are having very limited income like pension and interest income from only one bank. In the same bank only you are receiving pension also, by the way. Then that bank is called as a specified bank. You are called as a specified senior citizen. If a person who is a specified senior citizen having a bank with a specified bank, getting it. So in that case, if at all, whatever pension income bank knows, minus standard deduction 50,000 they'll calculate. Plus what bank is paying interest, the bank knows already. That interest will be added, gross total income. Minus if at all any deductions are there, this has to give, the senior citizen has to give all the deduction information, all that. So then on the balance income, tax will be calculated by the bank. See, that's why there is no rate here. Tax will be calculated at the rates in force, depending upon the option chosen by him. Getting the point? Which option he can choose? Year to year he can choose any option. Under 115 BSc, if at all you are not having business income, every year you can choose the option as per your convenience. But if you are having business income, if at all you are having, once you choose only that option. Once you withdraw from 115 BSc, you cannot go back to 115 BSc again. Default tax you cannot, unless you discontinued business. Unless you discontinued the business. That's it. So 194P understood. I'm not stressing much. It's easy. We'll solve a problem directly. Next, 194Q, purchase of goods. This section and 206C, 1H, these two are interlinked. 206C, 1H is applicable to seller of the goods. 194Q is applicable for buyer of the goods. If both the sections are applicable on a particular transaction, 194Q will apply, not 206C, 1H. Getting the point? Suppose I am purchasing goods from one seller, where the amount in a year I'm paying is more than 50 lakh. Where I'm purchasing goods, where I'm paying more than 50 lakh. 0.1% of the sum exceeding 50 lakh. Beyond 50, how much ever amount is there? Beyond 50 lakh, how much ever amount is there? Means it's a slab limit again, remember. So on that extra amount, 0.1% I have to collect. By the way, which buyer? That buyer, whose buyer means who? Whose total turnover is exceeding 10 crore in the immediately preceding financial year. Suppose I am a trader or I am a manufacturer, whoever it is. I will purchase goods in my business purpose. My previous turnover is how much? More than 10 crore. Then this 194Q section is applicable. 194Q is applicable if my previous turnover is more than 10 crore. And I am paying to some buyer. Getting it? Sorry. Some seller. So I purchase goods from them. So I am paying amount. For seller it's an income, right? So I should deduct TDS. Should I deduct TDS on purchase of goods? Yes. If the amount payable to the seller is exceeding 50 lakh. How much TDS? 0.1%. On what amount? Exceeding 50 lakh. Whereas 206(1)H, what it says, you know? If at all you are a seller of the goods whose turnover in the preceding year is exceeding 10 crore. Same logic. If at all you are a seller of the goods whose turnover is exceeding 50 lakhs in the previous year. If at all you are going to collect consideration for more than 50 lakhs in a year, on the amount exceeding 50 lakh, 1% TCS you should collect. How much you should collect? 1% TCS you should collect. Suppose I am a seller and I am selling you the goods. You are a buyer and I am a seller. My turnover is last year more than 10. Getting it? And I'm selling you goods worth of 70 lakhs to you. On the 20 lakhs I should collect 1%. 194Q 0.1%. Whereas TCS 10 times extra TDS amount. 1%. Getting the point? Suppose you are a buyer. You are paying me 70 lakh amount, but you don't have business turnover last year more than 10 crore. But I am a seller. I have turnover more than 10. Then 206(1) is applicable for me and I should apply. Suppose if at all you told me, no, for me also applicable 194Q. See, my turnover last year is more than 10 crore. So for me also 194Q is applicable. You said. You told me. In such a case, who should compromise? Seller should compromise. Buyer will deduct TDS at 0.1%. Understood? Are you clear? Can buyer and seller negotiate in this? No. This is a rule. Both of you have to follow exactly the rule. Like, can a buyer say, hey seller, you don't deduct, I will deduct. Even though section is not applicable to me, I will deduct. No, that kind of option is not there. Clear? That's it. So, if at all tax is deductible under provisions of the Act, other provisions of the Act, like this section will not apply. If 206(1)H and 194Q both are applicable, then 194Q will prevail, correct? Or if tax is collectible generally under these sections, tax is collectible under 206C generally, then also this provision does not apply. But if 1H alone is applicable, this provision will override. This provision has a overriding power only for 1H, not for remaining goods. For remaining goods and which are covered under TCS only will apply. Only for 1H we have overriding power. 194Q has a overriding power only for TCS, which provision? 1H. Whereas remaining provisions of TCS, will 194Q has a overriding power? No, because the exception says if at all tax is collectible under 206C or if tax is deductible under other provisions of the law. Are you clear? For example, I am a buyer of the goods. I am purchasing a car from a company, new car, dealer. I went to a dealer, I purchased a car for 1 crore. More than 50 lakhs. Should I deduct TDS? No. He will collect a TCS under 206C. This section will not apply if 206C is applicable. Yes or no? But which clause of which subsection of 206C, if applicable, still this section is applicable? 1H alone. Only for 206C 1H, 194Q was given overriding power. Remaining 206C provisions, whatever subsection 1, 1C, 1G, yes or no? For 1F, not 1F, sorry. Of course, 1F also. In all these four sections, if TCS is applicable, straight away TCS provision. TDS will not apply. Because original section says what? 194Q. 194Q section says what? If tax is deductible under other provisions on the same, of course, right now there is no other provision. There is no TDS provision on purchase of goods. There is no TDS provision on purchase of goods right now. If tax is collectible under TCS provision, then also this section will not apply. However, if 206C 1H is also applicable and this section also applicable, then 194Q will prevail. Then 194R, perquisite in kind or cash received by any businessman or professional. Getting it? In a year exceeding 20,000 rupees value. Getting it? In a year receiving exceeding 20,000 rupees in value, the person whoever is paying this benefit, 10% TDS he should deduct. Like example, very simple this example, many medical companies, no? Getting it? They'll be giving gifts to medical shops who are achieving targets. Now we are giving some car to one of the medical pharma distributor. Getting the point? A car, we are giving a car. Is it a perquisite in kind or not? Which is given to this medical company should collect TDS at 10% of the value of the benefit given. If at all the benefit given is exceeding 20,000. To cover these kind of practices, this provision was introduced. And if you recollect in PGBP, charging section 28 clause 4, perquisite in cash or kind, both are treated as what? Business income. That's it. Easy. So next, so shall we solve these problems? Examine the applicability of 194DA. X is a resident due to receive 4.5 lakh on 31st March towards maturity proceeds of LIC policy taken on 1st April 2021. Policy is issued on or after 1st April 2012. Policy is issued on or after 1st April 2012. In such a case, what is the sum assured? Cannot exceed 10%. So no, sum assured is how much? 4 lakh and premium is 1,25,000. Since the premium paid is exceeding 10% of the sum assured, therefore this is not exempt under 10 subsection 10D, not exempt. If it is not exempt, 4.5 lakh, since it is exceeding 1 lakh, TDS is applicable. What is the rate of TDS? 5%, straight away 5%, amount and all you calculate. So 4 point, by the way, TDS will be calculated on what? Income portion. TDS is calculated only on income portion. How to calculate income? Maturity proceed minus premium paid not claimed as a deduction in the earlier years. Here premium paid how much? 4.5 lakh. Sorry, 4.5 is the maturity amount. Premium paid how much? 1,25,000 per annum. You see, from 1st April 2021, annual premium is what? 1,25,000. So 1st April 2021 he paid. 1st April 2022 he paid. 1st April 2023 also he paid. 1st April 2024 did not come before that maturity set. 3 amounts he paid. How much he paid? 1,25,000 into 3. 3.75 lakh he paid. 3.75 lakh he paid. Now tell me, 3.75 lakh, out of this how much deduction he claimed? We don't know. Let us assume that he didn't claim any deduction. That entire amount will be treated as expenditure. Income portion is how much? Only 75,000 multiplied by how much? 5%. Don't think 75,000 is again less than 1 lakh. No. 1 lakh limit is we should compare with what? Maturity proceed. Maturity amount is 1 lakh. 1 lakh limit is for maturity amount. Here maturity amount is 4.5. Therefore TDS is how much? 3,750. Correct? So 5% should be deducted on 75,000. They didn't mention the amount, but the calculation I hope you can understand. Second one. Mr. Y, a resident, is due to receive 3.95 lakh on 31st March 2024. He is about to receive 3.95 lakh on 31st March on LIC policy taken on 31st March 2012. If the policy is issued before 1/4/2012, 20% of sum assured is the limit permitted. How much? 20% of sum assured before 1/4/2012. Getting it? For which sum assured is 3.5. Annual premium is 26. Forget about 20, it is less than 10 only still. So this is an exempted policy, right? Under 1010D, when it is an exempted policy, entire maturity is exempted, right? Will TDS provision apply? No. Third case, Mr. Z, a resident is due to receive 95,000 on 1st August 2023 towards maturity proceed. He is receiving maturity proceed, whereas policy is taken on 1st August 2017, for which sum assured is 90, but annual premium 10,000. Policy is taken on or after 1st April 2012. 10% only limit permitted to get exemption, but here 10% crossed premium. Therefore, this is a taxable policy. This is a taxable policy. But then, since the maturity is less than 1 lakh, TDS provision 194DA will not apply. Are you clear? All of you? That's it. Now illustration number 11. Mr. X sold his property in Bangalore as well as his rural agriculture land for a consideration of 60 lakh, 15 lakh. So building some immovable property which is sold for 60 lakh. Rural agriculture land is sold for 15 lakh. The land was purchased in the year 2022 for how much? 40 lakh. Okay, 2022 he purchased and first August itself he sold. Less than 24 months he owned. It's a short term capital asset, correct? Then for 14 lakh and agriculture land is sold for how much? Agriculture land is purchased for how much? 10 lakh. Agriculture land not a big deal because it's a rural agriculture land, yes or no? It's a rural agriculture land. With respect to rural agricultural land transaction, is there any tax consequence? Nothing. Now, the stamp duty value on the date of transfer is 85 and 20 for the purpose of for house property and for rural agriculture land. Stamp duty value is relevant for what? Suppose here who is purchasing? Y is purchasing from X. Y is purchasing at what price? 60. At what price? What is the stamp duty value? 85. How much is the income for him under other sources? 25 lakhs. Gift. Provided this gift can be taxed only if the stamp duty value is more than 110% of the consideration. Consideration is 60 lakh. Into 10% you apply 6 lakh. 66 lakhs beyond, if it is there only, gift provision will apply. Then what is the gift? Gift is equal to SDV minus consideration is equal to gift. Can I tax it? You can tax it if the stamp duty value is more than 110%. Here it is there. So in the hands of Y, 25 lakhs will be read as income. Now what about X? He is the seller, right? Immovable property 50C. Immovable property 50C. As per 50C, whenever you are dealing with whenever you are selling an immovable property, the full value of consideration shall be stamp duty value or actual consideration, whichever is higher. How much it is? 85 lakh. Yes or no? Minus what is the cost of acquisition? 40. Therefore, 45 lakhs will be short-term capital gain. Yes or no? Now, what is the tax implication in the hands of Y? Because Y is purchasing now. Y has to deduct TDS under 194 IA. How much he has to deduct TDS? By the way, let's apply whether section is applicable. What is the stamp duty value applicable in the case? 85 lakh. 85 or 50, whichever is higher? 85. Since it is exceeding threshold limit 50 lakh, TDS section 194 IA is applicable. What is the rate of TDS? On 85 lakh, which is 85,000. Now 85,000 rupees Y will deduct from 60 lakhs of the consideration which is paying to X, and balance amount, the balance amount will remit, this 85,000 will remit to the department. Yes or no? That's it. The problem is over. Next. With respect to rural agricultural land, there are no tax consequences at all. Next. Here this is regarding Sharma 194P. A resident Indian aged 77 years gets a pension of 52,000 per month. Just can I get a calculator? Yeah. So when I start tax class, I will bring my own calculator. So he is getting pension. How much more? 52,000 multiplied by 12 months. M plus. Correct? So all of you calculate along with me. 52,000 into 12 months M plus. Next, the same is credited to his savings account. In addition, he gets interest at 8% on fixed deposit of 20 lakh. 20 lakh into 8%, how much? 1,60,000 M plus. Yes or no? Out of the deposit of 20, 2 lakh represent 5-year term deposit made by him on 1st April. Okay, in this year only 2 lakh made. 1st April only he made. So which means on entire 20 we calculated per annum interest, which is correct only. Suppose if at all they gave information on some other date, then we should revise our calculation. Now again, he made a 5-year deposit, right? 5-year deposit in bank. ATC deduction. Yes or no? How much he can claim? Maximum ATC totally. 1.5 lakh is ATC. Interest on savings bank again is how much? 9,500. Fully tax it. 9,500 fully tax it. But remember, he is 77 years aged, which means 80 TTB deduction is available. Yes, and how much? 50,000 rupees. Up to 50,000 rupees you can claim deduction. Is it only for savings interest? Whether savings or fixed, whatever interest it is, up to 50,000 interest you can claim deduction. Actually, this fellow is having 20 lakhs into 8% plus 1,60,000 plus 9,500. 1,69,500 is the total interest available. 50,000 you can claim deduction. So this, remember, this 50,000 you can claim deduction under 80 TTB. Remember this point. Are you clear? So until now 7,93,500 is the gross salary and other sources income. But remember, in gross salary you should claim deduction flat 50,000, right? In order to arrive, so 50,000 M minus. Right now 7,43,500, which is the gross total income. Agreed or not? 1,50,000 ATC deduction, 50,000 80 TTB deduction. What is the net total income? 5,43,500. Are you all with me? That's it. 5,43,500. By the way, what is the tax liability? Senior citizen, let us assume he has not opted for. No, that's why deductions and all we claimed. Yes or no? So 43,500 into 20%, 8,700 plus 4%, 9,048 rupees. Correct? That's it. Hey, what happened? Hey, wait. He is 77 years. 3 lakhs only. 77, not senior, super senior. 77. 77 is obviously 3 lakhs. So 10,000 plus 43,500 something multiplied by 20%. So total tax will be approximately 19,000 approx. Cess and all you add and you calculate. That's it. 3 lakhs is the limit. Next. These provisions and all not required. Only key provisions I am revising in. Okay, only main provisions under TDS. By the way, this is one more important provision. What is the consequence of failure to pay, deduct or failure to? See, your liability under TDS. Once, what are the obligations of the deductor after deducting the TDS? 1, he has to remit within the due date. 2, he has to file ETDS return. If failure to file TDS return, 234E, there is a section which attracts a penalty per day 200 rupees for delayed filing fee. I think you don't have that. That is not there in CA. Whereas if you fail to pay on time, see here, no, there are 2 mistakes you can do. 1, you forgot to deduct, you failed to deduct, or you deducted but failed to remit. What is the rate of interest applicable? From date of liable to deduction. From date of liable to deduction to date of deduction. Getting it? Month includes part of a month also. Month includes part of a month also. How do you calculate a month here? Suppose you are liable to deduct on 10th May, but you deducted on, let us assume 12th. Let us assume you deducted on 9th June. 10th May you are supposed to deduct, but you deducted on 9th June. How much delay? 2 months. Month should be calculated on month April, May, June. Like that you should calculate, not 30 days. Are you getting it? You are supposed to deduct on when? May 10th. May 10th. If at all you deducted and paid by June 7th, no problem. You didn't deduct. You deducted when? June 9th. Means you late deducted. So for May month 1% interest applicable, which for which you didn't deduct. June month also part of a month late 1%. Since you deducted in June month, you should remit by when? July 7th. If you remit by July 7th, no problem. The 2% interest you pay enough. Suppose no. June 9th I have to deduct, right? Sorry, let us assume May 10th I deduct. May 10th I am supposed to deduct. Deductible date. June 9th is the actual date of deduction, but I remitted on July 10th. How? Like July, from the provision says 1% from the date of deductible to the date of deduction per month or part of a month. Since there is a late deduction, 2 months we calculated on the TDS amount 2% for late deduction. Now for late remittance, when is the due date? July 7th. Because I deducted on June 9th. June month I deducted. June month amount I should remit by what date? July 7th. But I remitted on July 9th. How much? How many days delay? After July 7th, 2 days. Which means 1 month delay, 1.5%. Wrong. For late deduction, for late remittance, interest shall be calculated from date of deduction itself. From date of deduction itself, you see, 1.5% for per month or part of a month from the date on which tax was deducted. It's not due date. Getting the point? Generally 1.5% students will apply from the due date of remittance. No. For late remittance, technically for late remittance, from due date of remittance only you should calculate interest, right? But the law is not like that. From original deduction date is that they are levying penalty. Which means, suppose, simple logic you see, Suppose the TDS amount is 1 lakh rupee. The TDS amount is 1 lakh rupee. So let us assume I paid this amount to the person on May 10th. I am supposed to deduct by May 9th, or at least by May 31st you deduct. And you, if at all you remitted by June 7th to the department this 1 lakh. Whether in reality you deducted on a department also, don't bother. Since you remitted May month related amount in June 7th, they consider you have complied. So no, 0. Suppose if at all you deducted in June 10th. You deducted in June 10th. You are supposed to remit by what? July 7th. Suppose you remitted 1 lakh, let's assume July 7th. Now what is the interest that you have to pay? Only on 1 lakh into 1% multiplied by May month you didn't deduct and June month you deducted. So May month non-deduction and June month also part of a month. Late, right? So 2 months is equal to how much? 2000 rupees you have to pay. Correct? Suppose let us assume you didn't pay July 7th, just 2 days later. July 9th you paid. This is as it is will apply. In addition to this, what else is applicable? Late remittance is there. For late remittance, interest is on how much? 1 lakh into 1.5% multiplied by how many months? From date of deduction, you have to calculate 1.5% interest. Date of deduction is on June 10th. Part of a month, June, 1.5%. July part of a month again, 1 month, full month will 1.5 into 1, 3, I mean 1.5% into 2 months, obviously, of course. We will consider 2 months. Totally 3%, 1.5 plus 1.5 is equal to how much? 3,000. So 5,000 rupees is the interest applicable. Are you clear? So for late deduction from deductible date to the date of deduction, just to check how many months involved. Days, number of days gap, that and all ignore. April, May, June, how many months involved? Deductible date which month? April. Deduction date which month? February. 11 months, that's it. Straight away 11 months. Due date when? June 7th due date. But you remitted June 10th. Which month you deducted? May month or June month? Consider June also, May month also. Deduction month also should be considered for late remittance interest calculation. Don't consider only due date month for late remittance calculation. Are you clear? Deduction month onwards, late interest will be applicable. Clear? Hey, all of you. So in that is the main provision. Actually in this, no, there is a link SSC in default. When SSC is not treated as SSC in default, link with 40 subsection A clause 1, 40 subsection A clause 1A, all that entire link is there, but it's okay. On this there is a problem on 6 sections. 194A, 194C, 194H, I, J, K, sorry 194H, I, J, R and this 201 subsection 1A, 201 1A and 194 series, that 6 sections, and 40 subsection A clause 1, clause 1A, they are all interlinked. One problem will be there. Only it's slightly confusing. It will be slightly confusing. Very simple. What 40A1, 40A1A says? 41A alone, let us see. 41A, any payment to resident by not complying TDS provision. By not complying TDS provision, that amount 30% will be disallowed. Not complied means what? Either you didn't deduct or deducted but not remitted. That's non-compliance. Now you are treated as SSC in default when you have not complied with the TDS provision. Suppose under 201 you are not treated as SSC in default. You are given exemption from SSC in default. When you will be given exemption from SSC in default? If at all the person from whom you should deduct, no, he filed IT return. In that, no, whatever amount you gave, no, he disclosed that amount. He paid tax also. Then see, the reason why we ask you to deduct TDS is so that other person will not escape. But he didn't escape. You showed me the proof. CS certificate is there. I will relieve you from SSC in default provision. If I relieve you from SSC in default provision, we assume that you have complied with the TDS provision. Now in this case, the month in which the deductee filed the return, right, that month is treated as deemed remittance. That month is treated as what? Deemed remittance. Deemed deduction and deemed remittance. Now from the date on which originally you have to deduct, no, till the date of actual filing of return by deductee, 1% per month interest is applicable. Have you seen this provision? Getting it? Now 194A, 194C, 194H, I, J, R. In all these cases, if at all the payer is individual or HUF who does not have a business or profession, of course 41 will not apply. Who have a business or profession but turnover is less than 1 crore, receipts are less than 50 lakh. These 6 sections are not applicable, right? If these 6 sections are not applicable, when I'm paying any payment related to that, if I do not deduct TDS, Will the disallowance attract to me? Disallowance itself will not attract. When disallowance will attract? If the person is liable to deduct and fail to do deduct, or deducted but failed to remit. First of all, I made professional fee where I am not at all. The section itself is not applicable. That section itself is not applicable. Will disallowance under 40A applicable? No. Are you clear? That's it. Same way, suppose you are liable to deduct, but you did not deduct, and you got exemption from SSC in default provision. In that case also, you are deemed to have complied. TDS provision. When the law assumes you are deemed to have complied with the TDS provision, 40A disallowance also will not attract. It will not attract. Are you clear? That's it. Next, TCS provision straight away. Okay. TCS provision I'll start. Sorry, higher rate of TDS. This also will find. Higher rate of TDS for non-furnishing of PAN. Suppose if the deductee for whom I am paying the amount, if that fellow is not giving me income tax, if at all that fellow is not giving me PAN number, what I will do if at all that fellow is not giving me PAN number? I will deduct a TDS at mentioned in the Finance Act or section or 20%, whichever is higher. That's it. However, in case if it is 194Q related, what is the rate of TDS? Maximum 5. Purchase of goods. Maximum 5%. Next. And higher rate of TDS for non-filers of income tax return. Non-filers. Suppose if at all you are a specified person. Non-filer means what? First of all, specified person. Suppose you are making payment to a specified person. Who is he? He is the one who did not file income tax return of the last year. Yes or no? He did not file previous year immediately preceding the financial, not 3 years logic. Not 3 years logic. Just last year you didn't file income tax return. And in that last year, that fellow has a TDS and TCS up to how much? 50,000 rupees or more. That fellow has not filed return of income in the last year, but he has a TDS amount. We call him as what? Specified person. If at all you are making any amount to specified person, he furnished PAN, everything is good, but still you will deduct TDS at what rate? Twice the rate prescribed in the provision section, twice the rate prescribed in the rate in force, or 5%, whichever is higher. Whichever is higher. This provision will not apply for salary, premature withdrawal of provident fund, winnings, online gaming, horse races, 194IA, immovable property purchases, rent payment for more than 50,000, 194M. See, in 194IA, IBM, in all these cases, TAN number is not required for them. Correct? TAN number is not required for them. That's it. So in all these cases, this section 206AB will not apply. For all other section 206AB is applicable. What is the highest rate in 206? 5% or twice the rate given in the section in the Finance Act, or twice the rate given in the section, whichever is higher. Suppose sir, the person is a not filer in the income tax return. Moreover, this year also he didn't give PAN number. Now 206A is applicable, 206AB is applicable. Which percentage should apply? Whichever is higher again. Under 206A, what percentage calculate? 206AB, what percentage you calculate? Whichever is higher. That's it. Clear? Advanced tax provision I will orally explain. Okay, then I will go with the TCS, or else I'll do one thing. TCS I'll complete and go with the advanced tax. We have totally 5 TCS sections. So what are the TCS sections? We have 206C deals with the TCS. We have totally subsection 1, 1C, 1F, 1G, 1H. Correct? So 1H is dealing with the seller of goods. 1G is dealing with the liberalized remittance system, overseas tour package. Correct? Seller of overseas tour package and liberalized. Sale of motor vehicle. Correct? And one is regarding, one is regarding the sale of timber, forest to produce, all that. One is regarding toll, parking lot, all that. Correct? Now, toll, parking lot, these are all quite easy. In this only, sale of motor vehicle provision I'll cover. LRS provision I'll cover. Sale of goods anyhow I have already covered. So these two if I discuss now, it will be over. Sale of motor vehicle I'll cover because there is no much complication involved right now. Whereas LRS and overseas tour package, there is an amendment which is applicable for the first time for May and also applicable for September as it is. Now sale of motor vehicle, very simple. I am purchasing car, getting it from anybody, dealer, whoever it is, generally, whether it is a second hand car or first hand car, provided I am purchasing it from dealers. I am purchasing it from dealers. They are supposed to deduct TDS at 1% if the value of the car is exceeding 10 lakh. What do you mean by value of the car? Ex showroom price. What is it? Ex showroom price. What is ex showroom price? Selling price plus GST is equal to ex showroom price, excluding road tax, excluding insurance, excluding other accessories charges, all that. Directly selling price plus GST is equal to ex showroom price. If that ex showroom price is exceeding 10 lakh, 1% is the TCS seller has to collect from the buyer. Clear? On that they have given some questionnaire. They have given some question and answer. CBDT clarification they have given. When and all this is applicable, when this is not applicable, all that they have given questions. Getting it? So that you just check it out later. The interpretation part I will tell you. Now, like, okay, I will explain that also, not an issue. 1F. Every person being a seller who receives any amount as consideration, he shall deduct at what rate? 1%. For this, there is a questionnaire which is given at the last. Yes, here you see. Is this provision applicable only at a retail level or sale of motor vehicles by manufacturers to dealers? It will not apply when the cars are being sold by manufacturers to dealers. At that time, 206C 1H is applicable. When manufacturers when manufacturers are selling cars to dealers and all, 206C 1H is applicable. Aggregate in a year 50 lakhs crossed. 1% is a sale collect under 1H provision. 1F will not apply. 1F will apply for whom? Retail sellers. Second hand car dealers will be there, sellers, retailers. Or first hand cars, directly new cars they will be selling now. They are called as retailers. For them only this provision is applicable. Correct? So this is one most important clarification. So whether TCS is applicable, if at all we are selling to government embassies, all that, generally for most of them exemption will be given. Yes or no? They are not liable for TCS. Is the TCS should be calculated for each vehicle or aggregate? Each vehicle. It is to be calculated for each vehicle. Is it applicable in case of individual? Generally, yeah, whoever it is, seller may be individual, whoever it is applicable. Dealership, that's it. You are a retailer, that's it. Retailer may be sole proprietor or a partnership from anybody. That's it. There is no other much bigger interpretation is involved here. Now 206 1G. 206 C subsection 1G. What is this subsection 1G talks about? Now here you see, you are remitting. See here you are remitting foreign currency. You are incurring some foreign expenditure, foreign related expenditure. For what purpose? Two purposes. Primarily two purposes. Are you buying overseas tour package? In this section, two provisions are discussed. 206C subsection 1G, 2 points are discussed. One, this section is applicable for two sellers. Very simple. This section is applicable for two sellers. One, seller of overseas tour package. Two, seller of dealer of foreign currency. Seller who is dealing with foreign currency, who is letting customers to remit foreign currency outside India for various purposes. For various purposes. Like we are all suppose let us assume our relative is studying at abroad. We want to send money to him. Through which channel we will send? Through authorized dealer we will send. For him TCS provision is applicable. Suppose you want to go abroad, tour. You want to buy a tour package, overseas tour package. Suppose there is a travel agency, tour operating company which is organizing this. That tour operating company shall collect a TCS for overseas tour package selling. What is the rate of TCS? For overseas tour package, 0 threshold limit. There is no threshold limit. Straight away 5% of the amount without any threshold. If at all the remittance is up to 30th September 2023. If the remittance is up to 30th September, whatever amount you remit, 5%. The moment it crossed 30 September, means 1st October onwards. Calculate, there is a clarification in the supplementary material. What they said is, up to 7 lakhs in the total remittance from the beginning to till date. From the beginning of the year to till date. Up to 7 lakhs, 5%, 20 lakhs thereafter. Now here, clarification is given. Up to 7 lakhs is there, right? Is it for the remittances freshly calculated from 1st October? Or is it remittances from 1st April onwards itself? 7 lakhs will be computed from 1st April onwards itself. Suppose by 30th September already you sent 7 lakhs. 5% TDS is already, TCS is already collected. Now again you are sending another 10 lakhs. Don't say again 7 lakhs fresh limit. No, straight away balance 10 lakhs will be liable for 20%. If the remittance is made on or after 1st October, then on the initial 7 lakhs, 5%, beyond 7 lakhs, 20%. Whenever you are purchasing overseas tour package, clarification says that. Next, suppose you are remitting for education purpose or medical treatment purpose. You are remitting for education or medical. Let us do one thing. I will directly discuss it in the supplementary material. You see better. Because in the supplementary material, anyhow, entire provision is given. The supplementary material, entire provision is given. You see. So whether you are remitting before 1st October or on or after 1st October, can I say like that? No TCS up to 7, not this, overseas tour package. Overseas tour package, 5% without any threshold limit if it is up to 1st October, before 1st October. After 1st October, up to 7 lakhs only 5%. Beyond 7 lakhs it is. Suppose I am remitting outside India. By the way, this is one particular provision for which a separate 7 lakhs limit is applicable. By the way, here there is no threshold limit. Up to first 7 lakh 5%. Beyond 7 lakh it is 20. Even if the tour package is just 1 lakh, 5% is applicable. Suppose if the total tour package cost by paid is more than 7 lakhs. The moment it crosses 7 lakhs, extra amount is 20. Below 7 it is 5%. Suppose I am sending it for education purpose or medical treatment purpose. It may be before or after, forget. Up to 7 lakhs, 0. The moment it crosses 7 lakh, 5%. The moment it crosses 7 lakh, 5%. Suppose I am remitting by borrowing loan from a bank. By borrowing loan from a bank, I am remitting. Same, up to 7 lakh, 0. But since you are paying out of loan money, which is not your income, I know you will not have much of income. Why TCS is to be collected? TCS, why I will collect generally? Because you are having income, you may escape from paying of tax. But you borrowed loan and remitting. That's not your income, right? So TCS is levied at a lower rate, 0.5% in excess of 7 lakhs. Sir, it's not overseas tour package. It's not education or medical purpose. I am paying it for some other purpose. Some purpose I am paying. In that case, up to 7 lakhs you have limit. Up to 7 lakhs, no TCS. But the moment it crosses 7 lakhs, 5%. In case if it is up to 30th September, the moment it crosses 30th September, it is 20%. The moment it crosses 20%. Very simple. Right now from 1st October, TCS rate is revised up for 20%, 5 to 20. For which remittances other than education and medical? For education and medical, old TCS rate only retained, 5% only. For education and medical purpose, if it is up to 7 lakh, you are remitting 0 TCS, no TCS. Beyond 7 lakhs, you have to collect TCS at 5%. Suppose if you are remitting for any other purpose, the moment it crosses 7 lakh, 20%. Are you getting it? From 1st October. If it is before 1st October, whatever amount extra you remitted beyond 7, 5% only still before 1st October. Overseas tour package, earlier it is only 5% flat on entire amount, but now it is up to 7 lakh 5%, beyond 7 lakh it is 20%. Correct? This 20% limit applicable when after 1st October, on or after 1st October. Now, do we have this 7 lakh limit separately for education and medical, separate limit for overseas tour package, separate limit for other than education and medical? Do we have a separate limit like this? No. Earlier we all interpret as a separate limit. Now department gave a clarification, no separate limit. For example, I remitted 3 lakhs for education purpose in May month. I remitted 4 lakhs for education purpose in, let us assume, in the August month. Education, this is medical. I remitted some other purpose 3 lakhs in September. I remitted some other purpose. What is it? Other purpose in September. And this is, by the way, overseas tour package, that's a separate limit. That's a separate, because TCS is always applicable on overseas tour package. There is no exemption at all. For them, what? Only rate alone confusion. For overseas tour package, which rate you should apply? If at all remittance is on or before 30th September, straight away 5% on, 5% of remittance. If it is on after on or after 1st October, then up to 7 lakh 5%, beyond 7 lakh 20%. This is the only thing. So this is separate category. Ignore it. Now I am talking about other than overseas tour package. Seller of foreign currency, nothing but. From his point of view, I am talking about. For what purpose buyer is remitting the foreign currency? Education and medical. Or other purpose, whatever it is. Up to 7 lakh, zero. Whether you are remitting before 30 September or after 30 September, doesn't matter. Whether you are remitting for education or medical or other purpose, doesn't matter. Up to 7 it is zero. The moment it crosses 7. Now, for what purpose you are remitting LC? For what purpose you are remitting LC? The moment it crosses 7. Throughout the year, I am not thinking of dates now. The moment total, see, overseas tour package, keep it aside, don't consider that. Are you remitting for what purpose? You are remitting for what purpose? Education, medical or other purpose, whatever it is. How much you are remitting? More than 7. Up to 7, 0. You remitted more than 7. Right now you are remitting another 3 lakhs extra. 7 is over already. 3 lakhs you are remitting. Is it before 1st October checkout? Yes. It is before 1st October. What purpose? I will not see 5%. Suppose if it is after 1st October, I will see what purpose? Education and medical, 5%. Other than medication and medical, 20%. That's it. Easy. Over. The provision is over. That's it. Are you clear? You all know this? Thank you. Thank you. So entire this questionnaire is over. This questionnaire is over. Are you clear, all of you? Yes. That's what. Okay. That's it. So with this 206C 1G, remittances under LRS and overseas tour package purchase is also over. With this TCS provisions is also over. Predominantly it is over. So okay, fine, we'll take a small break and then get back and discuss one problem that is there on this, I guess. So once it is over, MTP will start. Confident? So that's it. TDS and TCS complete discussion is done. We completed within maximum some 2 hours 15 minutes time. That too with the explanation and problem solving. Don't neglect this chapter. If possible, try to cover. If at all you can't cover 100% syllabus. If at all you plan to leave TDS, TCS, that's okay. Just listen to the marathon part and then go. Probably if at all a chance there, same questions, whatever I told, maximum will come. Clear? That's it. So with this TDS, TCS is over. We'll begin MTP1.